Good afternoon and welcome to HCR's Cyber Conference. And thank you for joining all you need to know about cyber insurance itself. My name is Finch. I'm a partner. I head up the disputes team at Harrison Clark Rickaby's Cheltenham office. I specialise in fraud and civil recovery, most of which is cyber enabled. And I also sit as a director on the Midlands Fraud Forum and helping to launch the Southwest Fraud Forum as well, both of which are not-for-profit organisations looking to prevent, detect and mitigate against fraud. I'm absolutely delighted to be joined today by experts in the cyber insurance field to help chat through some of the issues our clients are facing when dealing with cyber insurance, how to procure such services, how best to protect themselves and obtain the best price as well. We'll also have a look at how we see the market evolving over the next 2 years. Looking to introduce the panel members, I'm joined by Simon de Boulay. Simon is part of Lime Street Brokers and heads up the cyber, product recall and intellectual property brokering arm of Lime Street. Simon also has over 6 years in crisis management, ex-military, and is a major in the Army Reserve, and makes me feel quite inadequate. I also like to introduce Lindsey Nelson of CFC Underwriting. CFC is one of the first companies to offer cyber insurance back in the 90s worldwide. Lindsey's role at CFC is a cyber development leader, dealing with a cyber distribution strategy at CFC. We're also joined by Camilla Walker of Canopius, an insurer in the cyber risk market. Camilla's role is cyber underwriter, helping businesses deal with risks and cyber insurance. And finally, and by no means least, joined by Corinne Hammond of Axis Capital. Axis is also another specialist insurer dealing with cyber. And Corinne's role is as an underwriter, helping businesses deal with risks. We have a number of questions that we're looking to address to run through cyber insurance and hopefully give you a greater understanding about the market we have to deal with. But please, you should have a chat function on screen. So if you do have any questions, we'll do our best to pick those up at the end. As you're all aware, clearly cyber risks are increasing and the need for insurance is also ever more prominent. So all we plan to do is just run through a few of those questions now. The first question, probably the obvious place to start, is one for you, Simon. What is cyber insurance?
Thank you. Cyber insurance first emerged about a generation ago, primarily in the US, and it was used to ensure business interruption and particularly damage to data exposures caused around the era of the dot-com bubble. However, take-up was limited. However, as the internet and payments networks grew, there were concerns over vulnerabilities increased. Now, there was an enactment of the California Security Breach Information Act around July 2003, and that sort of regulated the privacy of personal obligations of those handling data to disclose any adverse cyber incidents. Now, this was again primarily driven and focused at businesses in the US, and this legislation swept across the US with similar legislative changes being adopted. And that was really the primary driver for the cyber insurance market. This tougher legislation gave way to by the EU to the GDPR, which came into force in 2018. Now, cyber insurance, primarily, it's an insurance product that's designed to help businesses hedge against potentially devastating effects of cybercrime, such as malware, ransomware, distributed denial of service attacks, hacking events, and electronic data breaches by funding investigation and reimbursing of losses. And pretty much any other method that's used to compromise a network and sensitive data. Now, it can help protect businesses against these digital risks by supporting you financially if you experience one of these events. Now, risks of these natures are typically excluded from traditional commercial liability policies, or at least are not specifically defined in traditional insurance products. So generally what you find is that most policies nowadays are specifically excluding cyber events. And you do have the option to get a cyber right back in some of your policies. However, these don't provide you with the same level of protection that a cyber policy would. Now, a cyber policy will cover losses relating to damage to or loss of information from IT systems and networks, and they do include significant assistance with and the management with an event, a cyber event, particularly when a company is faced with reputational damages or any regulatory enforcement. Cyber risk as a whole falls into one of two parts. It's first party and third party risks. And the policies you can buy can cover either or both of those risks. So first party primarily covers the business's own assets. So this could be loss or damage to digital assets, such as data or software, business interruption costs that come from network downtime, cyber extortion, whereby third parties threaten to damage or release data if money isn't paid, customer notification expenses, when there is a legal or regulatory requirement to notify that there's been a privacy breach, and reputational damage. Now, third-party insurance basically covers the assets of others, typically your customers. So security and privacy breaches, the investigation and defense costs and civil damages associated with them, multimedia liability to cover the investigation, defense costs, and civil damages, and loss of third-party data, including payment of compensation to your customers.
Thank you for that, Simon. Lindsey, from your perspective, why is cyber insurance important?
Yeah, and that was a good breakdown from Simon on as well as to what cyber actually is. If I could just add on to that quite quickly, because it does so much, and there's so many different coverage grants outside of what we traditionally think of as a privacy liability-driven product. It's really easy to just simplify it as well and into a couple of key ways. So if I could just leave you with the top 3 ways to explain cyber insurance. First and foremost is just coverage for your intangible assets. So your software and your data, that's essentially covered. That's the intent of a cyber policy. It's not a physical damage property policy. It's intangible assets, which are largely a company's biggest exposure. So going on to why the coverage is important, it's for intangible assets, and you're 9 times more likely to suffer a cyber event than you are your building burning down. So the frequency of loss is much different. Number 2, it's really, crime has shifted from the physical to the electronic now. It's much more lucrative, much easier to conduct, and it's the path of least resistance to get money out of a business by attacking them electronically, or conducting social engineering fraud on smaller businesses to get that fake MD, fake vendor supplier scam working in your favor as a criminal. So you can look at it as a modern day crime policy. That's technically what cyber policies can do. And the last one, and I think the most important, is that it's a proactive incident response service. So yes, there's language on the plane, and yes, you get an insurance contract when you buy it, but typically what clients are buying for is access to a set of experts who can help should the worst go wrong. And why the cyber is important on that basis is really because the IT function of a business is often so different from what an incident response function is. So IT departments of a business know the business in and out. They know the systems, the networks that a company is operating with. But incident response are the people who have experience in dealing with the threat actors, negotiating to get ransom payments down. They'll be familiar with the variants of ransom and whether they give you the decryption feedback or not. And they actually work quite complementary to the company's IT department. So in the event that the worst should happen, and increasingly we're seeing more and more cyber claims as we see more policyholders, cyber insurance is really there to make sure that we can help get you back to the company operationally, and mitigate any reputational damage as a knock-on effect of that.
Okay, no, thank you very much for that. And certainly trying to value and quantify data is difficult. So anything to help with that is always appreciated. Camilla, just one for you. What sort of events can cyber insurance help cover?
So Simon split out the kind of first and third party sections of a policy. So if we take the third party section to start with, I think the most obvious event that we're all overly familiar with is the data breach. So that's kind of a loss or unauthorized access to personally identifiable information. So names, addresses, driving licenses, that sort of thing, health information, payment card information, and more recently the trend towards kind of capturing biometric information, which is an even more concerning area given you can replace your credit card, you can't replace your fingerprint. Once that's out there, the repercussions can be really quite scary, actually. So as Lindsey mentioned, you get access to that kind of incident response in the immediate aftermath of an incident. So you'll get access to forensic experts, legal experts, You can organise kind of notification to customers and regulators, credit monitoring services for any affected individuals, and you get PR experts to help facilitate kind of the initial communication to consumers and stakeholders following an incident. So once that kind of initial aftermath is sorted, any claims arising out of that data breach would be covered under the policy, so damages, defence costs, any regulatory actions and associated fines where insurable by law. But the third-party section isn't just limited to data breaches. It's difficult to provide kind of an exhaustive list, but it responds to a number of different scenarios. So transmitting malware to a third-party network, non-compliance with regulatory standards, the wrongful collection or use of data, failure to comply with kind of rules around notification of breaches, and even kind of a breach of the insured's own privacy or security policy. So it's a relatively broad part of cover. We're essentially aiming to cover all liability arising out of a cyber event. So that's kind of the third party side of the coverage. And I think, Corinne, you were going to touch on the first party side.
Yeah, thank you. I think initially we did see the insurance aimed more at data-heavy companies that had a lot of personal information, just because they were the ones that were more likely to fall foul of the developing regulatory environment. But in recent years, we've definitely seen a bit of a shift towards more first-party events and exposures, which is probably partially aligned with the increase in ransomware. And it's really thinking about the knock-on effects, as companies sometimes can struggle after the initial breach to get their systems back up and running. So we're seeing a lot of business interruption claims in the sort of more first-party section after the legal forensic crisis management is out of the way. It's that loss of income while a company's trying to get back up and running. And in even more recent years, we've seen that expand further. So thinking about the fact that most companies now are relying on a lot of other companies to do business, whether that's supporting their network or supply chain. So we're kind of looking at ways to ensure downtime that our insured would have as a result of one of those companies having a cyber event as well. So quite expansive first-party coverages to cover a range of business interruption events.
Okay, no, thank you. Very comprehensive. So currently in your experience as an underwriter, Camilla, what sort of claims are you seeing being made at the moment?
Well, it's a very different picture the last kind of couple of years than it has been historically. As we've touched on, kind of data breaches were the big driver kind of 7 or so years ago. And then as businesses have become more and more reliant on technology, that business interruption piece has become a big driver of purchase. What we've experienced as a market over the last kind of 18 months or so, though, is a change to the threat landscape for insureds that's really kind of changed the claims makeup that we're seeing ourselves, and that is ransomware. This isn't a new threat by any means. I think one of the first ransomware attacks was in the 1980s and delivered by a floppy disk. So whilst that kind of medium has changed, what's really changed in the last 18 months or so is the frequencies of the attacks and how much these adversaries are requesting as ransoms. Historically, this would have been kind of a few $1,000s, but now it's regularly within that few $1 million. And we've seen a number of kind of examples of ransoms being demanded over about $50 million. And whilst it's easy to kind of sit here and say we'd never pay that, hackers have become much more sophisticated. So they're not just targeting your live data, they're trying to corrupt backup data so that you really have no choice but to pay that ransom. Otherwise, you're trying to kind of recreate all of your data from scratch. And if you are a sophisticated enough entity to have intact backups following a ransomware attack, it's not quick to kind of restore all of your data across the entity. So it becomes a toss-up of whether the income and the kind of reputational loss you'd suffer from not being able to operate for 14 days is worth not paying that ransom for. So it's certainly a complex area to navigate as an insured, and that's something these adversaries are really exploiting at the moment. So what that means is for us is that ransomware losses, and within that bracket I would include business interruption losses suffered by insureds who have chosen not to pay a ransom, have really made up the majority of the claims we've seen over the last 1.5 to 2 years. And that's not to say the data breaches and the kind of non-ransom related first-party losses aren't happening anymore. It's just the frequency of these ransomware attacks means they are the main driver of our claims currently.
Yeah. Okay. No, thank you. And then Corinne, are you seeing anything different at Axis at all?
think it's much the same, to be honest. I think everyone's been seeing ransomware really tick up over the last couple of years. And part of the problem with it and what's really driving the losses is it's not just the frequency, it's the severity as well. So just much larger demands than we've seen before. The positive part is we have recently started to see some of the groups, the perpetrators, being disbanded. I think Revel, and there's been a couple recently. So that could maybe start having a slightly more positive impact on it, but of course they could regroup and come back again. We're seeing a lot of social engineering as well, normally kind of targeted to the smaller companies, but people being tricked into sending information somewhere or funds somewhere. And one of the other areas that we've seen developing that's a little bit tricky for us is around the fines. So just seeing really large fines, and also sometimes regulators not always being particularly transparent with some of their reasoning for the fines. So trying to sort of work out trends and see where it's going and predict what might happen is quite tricky at the moment. I think there's been some really hefty GDPR fines that are public knowledge now, but in the hundreds of millions, but still just not very much clarity around those, which makes things quite difficult.
Yeah, agreed. Thank you for that. And top prize to you, Camilla, for getting in floppy disks. Probably the only time they may be mentioned in Cyber Week. It does remind me that quite often in the early days we were seeing memory sticks left around in car parks and pubs, whatever else they were used to attack a business, and how things have developed since then. One area that quite often my clients regularly addresses is the costs of cyber insurance, and is it worth the money? We've seen time and time again that cyber is a high priority for all businesses. 8 in 10, I think, on average, has it as a high priority, but probably only 1 to 2 in 10 will have cyber insurance in place. So, Simon, from your perspective as brokering this market, is it worth the money?
Yes, I absolutely think it is worth the money because, well, first and foremost, cyber insurance can't stop your business becoming a victim of a cyber attack, but it can help you manage and mitigate the consequences of such an attack and help your organization get back on track. Now, not having a policy could mean that you as a business are expected to investigate any of the breaches, recover the data, and deal with any customer concerns. And all of this can take time, cost money, and it quickly exhausts any resources you may have. With that in mind, can your business afford not to have the cyber insurance? It's the last line of risk mitigation tools that can lessen or dampen your company's cyber risk. It's an important one as data breaches and other cyber incidences are happening daily to entities both large and small, even ones with huge information security departments, such as the recent Twitter hack. Now, sometimes even when you do all the right things and follow all the best practices, you can still be hacked, and that's when your cyber insurance policy should kick in to help offset the outsized costs of a successful hacker event. And they can add up quickly. You're looking at technical firms, help with forensics, investigation, public relations, legal costs. All of these can rapidly ramp up. And having a cyber insurance policy in place can really mean the difference between your company surviving a cyber attack or your organization not surviving. But critically as well, it's also about having the right cyber insurance policy in place that is tailored to you and your business. And if you don't have the right one, it's almost as bad as not having a policy at all.
And presumably having those experts on hand to be signposted at a time when you probably have no time at all to urgently respond to a hack, loss of data, is also helpful.
Yes, absolutely. I mean, part of the benefit of having a cyber insurance policy is you get access to a huge panel of experts that a lot of the insurers have now.
Okay, and Camilla, from your perspective?
Yeah, I would agree with Simon. I mean, even though we are in a fairly difficult economic climate, it just definitely is worth the money, in my opinion. As Simon mentioned, no one is immune to a cyber attack, and we've seen countless examples of companies who have heavily invested in their cybersecurity still falling victim to pretty sophisticated attacks. It's been interesting to kind of watch the take-up rates over the last 18 months during the pandemic, given the kind of unfortunate combination of the tough kind of economic climate, particularly in certain sectors, and the material increases being charged by the cyber insurance market. And I think it's been encouraging in terms of large companies seemingly really understanding their cyber exposure that we haven't seen a lot of existing insureds looking to self-insure. There have certainly been some reducing limits due to budgetary restraints, but not stopping purchasing kind of in its entirety. And I think with the claims environment as it is, in my eyes, cybersecurity and investment and insurance has to be a priority, even in these kind of more tricky climates.
Yeah, no, I agree. And I think it probably is easier for larger companies to commit those resources. What we're finding with the SMEs, it's a struggle at times, and we're still feeling the effects of COVID itself. So maybe one for you, Simon. How best can we help sort of SMEs with securing cyber insurance?
I think first and foremost, so UK SMEs need to realise that they can, even though they're a small company, they can still be on the receiving end of a cyber attack. And I think part of the reason why there isn't as much of an uptake in the UK SME market is that they just think they're too small for it to happen to them. Nearly all UK SMEs admit their employees lack some necessary skills to carry out security testing. And across the board, there is a cybersecurity skills shortage, with just 1 in 5 companies revealed to have in-house capability to protect any critical assets from an attack. 96% of those hit by a data breach in the last year report that inadequate security testing was at least somewhat responsible for the issue. And SMEs with employees of less than 250 employees are the most vulnerable. Only 1% of small companies have the knowledge to fully protect their data and assets against cyber attacks. Now, the impact of these cyber attacks on the small businesses can be fatal. 48% of SMEs in the US said that a data breach would likely shut down their business permanently. And similarly, 1 in 3 UK SMEs have battled a security breach that hit their bottom line looking back in 2018. Now, the larger companies may have the financial resources to mitigate the effects of a cyber attack, but the skills gap should be a cause for concern to corporations that rely on the smaller companies, because hackers can identify the weak spots in that supply chain and attack through that. And then looking across, KPMG did a survey where they disclosed that of the SMEs that have fallen victim to a cyber attack, that 89% felt that the attack had impacted their reputation. 30% have reported a loss of clients. 25% have had negative reviews on social media. 26% were unable to grow in line with their previous 26% were unable to grow in line with their previous forecasts. And 93% of those suffered operational limitations. I'll hand over to Lindsey, because I know the UK SME is a particular strength for CFC in this space.
Thank you, Simon.
Yeah, it does lead on to the earlier points made about, is cyber insurance worth it? I think above anything for UK SME, and I'll keep it territory agnostic as well. For any small business, you're going to be under budgetary constraints where you don't necessarily have the resources, or I should say the focus, especially in the last 18 months, for focusing on security. And the threat actors aren't going after small businesses necessarily because they're valuable. They're going after them because they're vulnerable. And there's a natural assumption that they won't have best-in-class controls in place or a dedicated privacy or security team there with the latest and greatest software to help prevent these attacks. So that's exactly why they're going after them. I think Corinne mentioned earlier as well, they can get caught in the crosshairs of larger systemic attacks where it's actually the MSPs or cloud computing providers who are the target, but you've got these hundreds of thousands of businesses around the world who are reliant on them for the hosting of that data, and therefore the notification obligation becomes theirs as a result of somebody else's attack. So there's certainly the vulnerability there. I think the important point worth noting is that cyber is by no means a large business issue. We tend to hear about it in the news from the FTSE companies and the Fortune 500 companies around the world, because they tend to have multiple stakeholders involved, and it tends to be the big data breach, privacy events where millions of their customers are affected. Third-party liability claims for us at CFC are less than 4% of our claims activity. It's purely a first-party driven policy. 90% of the claims that we see are for companies under 100 million in turnover. That is also a product of our portfolio, but it is really telling to see how many of those companies are falling victim to it. And where cyber comes into place, I think Simon mentioned earlier, cyber insurance can't help you prevent an attack, but as of today, it can actually help you prevent an attack. And there's countless companies and clients that we've spoke to who say, the claims response was great. I loved the instant response service I got with the policy when we got hacked or fell victim to a ransomware attack. But it still leaves you with that feeling afterwards as a business that you've been intruded and somebody's been in your network, and you don't feel great about it despite being financially compensated for it. What cyber insurers are looking to do now is transition that and be proactive. Because as cyber insurers, it's in our mutual best interest to prevent an attack from happening if we're insuring it as well. So we're doing whatever we can from a threat analysis perspective. And this isn't a CFC specific thing. This is something across the industry, to look to get ahead of claims before they happen and actually help manage the frequency so we can therefore have a better control on the severity when it happens. So doing continuous monitoring services on behalf of clients, sending out threat alerts where we found vulnerabilities for companies is going to be the future of cyber insurance, and really what cyber insurance is doing as of today in practice for clients. So I would say it's absolutely worth the money. And certainly for small businesses more than anybody who don't have those enterprise grade teams, they can really benefit from the assistance of the experts even before something goes wrong.
Okay, no, thank you very much, Lindsey. And so taking that theme a little bit further, Simon, is there anything businesses can do with the premium for insurance? Because I'm aware that premiums generally across the board are going up, or whether that's as a result of the general climate reaction to COVID on business interruption, or the market's tightening. From your perspective, do you help clients in trying to sort of mitigate that sort of threat analysis?
Yeah, I'm looking at the pricing and how it has been historically and sort of where it's going. Yes, you're right. There is that increase in the pricing. I mean, part of the reasons for that, if you look at it from a pre-pandemic and a post-pandemic sort of setting, pre-pandemic there were claims that obviously involved a lot of cyber, predominantly data centered around data breaches, but as a class of insurance as a whole, it's very much in its infancy when you compare it to, say, the marine classes, which have been around since, the very first insurance policy. It was seen as a class of business that everybody should write. And due to the limited losses involved and the income to be earned, everybody piled in. This created an environment where there were a large amount of insurers all competing for the business. And it really became a buyer's market, drove down prices, increased coverages, and what we call in the insurance world is sort of a soft market. And critically to underpinning all of that was a sort of limited data set that was available in terms of, I think what was mentioned earlier, talking about the frequency and severity of the claims. Data was lacking, and so putting a realistic expectation on the pricing and all that was a difficult thing to achieve. However, since the pandemic, which has created this reliance on remote working, we've seen a number of changes to the cyber landscape. So across the board, so investment in cybersecurity is projected to reach 23 billion in 2020. 65% of UK SMEs have suffered an attack in 2019, 2020. And the losses from cybercrime, which, looking at economic espionage, intellectual property, financial crime, ransomware, approaching 1 trillion or 1% of global GDP. And somewhere in the world there's a ransomware attack occurring every 11 seconds. And I think, as Camilla was saying, the costs of these ransomware attacks have increased exponentially. And it's really ransomware in this environment now, post-pandemic, which has been the game changer in all of this. And what you're seeing is a price correction. There are capacity is being reduced in the market. So there's less people offering bigger lines. So everybody's tightening up how much money they're going to put down on any one risk. And the consequence to that is it is driving up prices. And probably what would be called a price correction that's going on.
Okay, no, thank you for that. And Lindsey, from your perspective, is there anything businesses can do to help reduce the potential price for insurance?
Yeah, the conversation has definitely shifted in the last 18 months in response to what, where we've not had the price right historically is probably the best way to put it in the last 20 so years. And Simon did a good overview there. It was, as he mentioned, a soft market, new entrants, new line of coverage. For a lot of insurers, there's, two positions. There's one where not everybody has had the scalability and volume of businesses to pull meaningful trends from in order to know what that rate should be. And then there's the other segment where they do have scalability, but their data is segregated internationally. So there's not that consolidated data set to come to the same conclusion. So having data and scale and being able to write for a long time is quite valuable in order to ensure that the price is right going forward. And that's exactly what the market is doing now, and being a little bit more transparent about their data. The conversation I mentioned is shifting. The conversation used to be a couple of years ago, from a lot of clients, what can I implement and what security measures can I adopt in order to get a discount on my cyber pricing? Similar question to today. I think that's really quickly changed to what can I adopt to get insurance, full stop. And I think that's a product of the fact that a lot of insurers are now being much more selective than they ever have before as they manage their own portfolios and what risks they decide to take on as businesses. They really are looking for best-in-class measures and expecting more robust security controls the larger an organization gets. Because the expectation is that cyber insurance should be one of many methods of risk transfer a business should undertake. It shouldn't be the full risk transfer solution. So we are looking in for a little bit more buy-in from what I'd say are mid-market and large corporations in the UK. Smaller businesses, we do treat them quite separately, and there is a recognition that they're likely not going to be able to have the budgets or understand what those controls are. But it all balances out in the end with that. So we agree that we'll do what we can in order to ensure that businesses adopt those security provisions. It's not necessarily going to lead to discounts. It will be more a fact of getting insurance in the first place and being a little bit more flexible with limits deployed and what the access levels look like. But certainly conversations with an incident response team or threat analysis team from an insurer who has that data to say, having this prevents this type of incident is a really valuable conversation to have nonetheless up front and make the most use of that data available.
Okay, no, thank you. So presumably sort of more the business talks to the insurer and the broker, better understanding of that business that may have an impact on the premium. Thank you for that. I'm also aware that some number of my clients and businesses out there are struggling to obtain cyber insurance. Lindsey, from your perspective, are there certain sectors, businesses that are harder to insure?
It probably depends on who you talk to with what their portfolios look like. I think one of the interesting points about an event like ransomware, which is at the front of every insurer's mind, is that it's not territory specific. It's not industry specific, and it's certainly not specific to any revenue size of business either. It's hitting everybody all over the world. Again, going back to my earlier point of just companies who are vulnerable being the targets rather than the ones who are necessarily valuable. In response to how the market is viewing them as well, there's different approaches that can be taken. Some people will restrict appetite based on industry, typically where we've seen that in the UK tends to be a little bit more of a cautious approach around public sector entities, including municipalities, the education sector, healthcare, perhaps under the assumption that because they're public sector, they're going to have much more limited IT budgets to work with, and often operating on legacy systems, which eventually become much more expensive to rebuild, should that be the decision a business takes. There's also an awareness that criminals might be going after those segments of business because they'll have no choice but to pay the ransom as well. So it becomes much more lucrative for them as a target. So Healthcare being a perfect example of that. If you go after healthcare, it is literally a matter of life and death. You do need to get back up and running operationally, and perhaps a payment is what that business will decide to make. That's one theory there. I think overall, though, it is important that it's not industry specific. I mean, those are just trends and some assumptions and some views that insurers have taken. Overall, having best-in-class security controls and ensuring that no business is left vulnerable is really what's going to help prevent and make up for some of the losses that the market has seen in the years prior. But it's also going to future-proof against future losses. So we've got a more sustained market with more longevity and consistency to it as well. That's the short form version of that as well. I think the key takeaway is just preparing in advance and having conversations with underwriters well in advance of when the expected purchase date is to ensure that those measures are adopted and therefore make them an insurable risk.
Yeah, no, excellent advice. Thank you. And Corinne, from your perspective, are you experiencing any sort of businesses that are finding it harder to secure cover?
Yeah, we are definitely finding it difficult to insure certain companies, but I would completely agree with everything that Lindsey's just said. We're not really taking an approach where we're saying no to a particular industry. We're really looking for businesses that have best-in-class controls. And I think the market at the moment might seem like it's very difficult. It is difficult. It's difficult for all of us. And insurers are all taking a completely different approach to how they manage this. But at Axis, we're really looking for companies to meet certain standards, and we've set certain controls that we would expect to see, which are largely based around the claims that we're seeing, particularly the ransomware claims. So we're looking for companies to have the kind of controls in place that we believe would prevent the majority of those ransomware attacks. It can be really tricky, especially with clients that you've had for a while, if they're not moving quickly with the times and implementing the kind of controls that we would hope to see, but we really try and work with them to get as much of an understanding as we can, what they are doing, how they're mitigating their specific threats. And if there's still certain controls that they don't have at the end of all of that, we have partnerships with a few companies that can help them implement some of those more basic things so that they can get themselves to a level where they can get insurance. If after all that they're still finding it difficult, then I'd say we'd probably recommend them to take on board any of the feedback that they've had from people and maybe spend a bit of time investing in their security program and then coming back to market again when they're feeling a little bit more prepared. But yeah, our approach is definitely not to turn anyone down straight away. We're really trying to get under the hood and understand what they're doing and just ensuring that they're meeting those minimum requirements that we've set.
Okay, no, thank you. That's really good to hear that there is no sort of certain markets being excluded. It's just a real focus on what processes and controls are in place, and that's more in our control, I guess, from that perspective. We've touched on pricing already, but Camilla, I just wonder if there's anything from your perspective on how businesses, our clients, etc., can help sort of deal with the pricing of insurance and reducing premiums.
I think Lindsey and Corinne have touched on most of this already, but I think the pre-breach services are kind of the biggest thing we as insurers can do to help clients in the long term reduce premium. Because in its simplest form, the less claims we'll have, the lower the premium increases are going to be. So everything we can do to avoid clients having losses is beneficial to everyone. And then the other ways we can help in limiting that premium increase is to keep clients kind of abreast of the minimum standards that have been discussed and the factors that really influence our decisions around premium and appetite. I think to kind of let an insured know a few weeks before renewal that we need X, Y, and Z in place puts them in a really difficult position. Whereas if they've got this communicated to them in advance, they've got the best chance of kind of putting that in place prior to the renewal and hopefully reaping the benefits from a premium perspective.
Okay, so what sort of period should a business be looking to approach an insurer? Sort of a few months in advance of renewal?
I mean, it really depends on the size of the business. Trying to kind of implement something like multi-factor authentication for a large business can take well over 6 months. So I think it's just about, rather than letting the insured approach us, kind of us as insurers and brokers have to really articulate exactly what we're concerned about and getting that message out to clients as soon as possible so they can start progressing.
Okay, so that's all regular touch points rather than leaving it to the last minute. Certainly one takeaway from all of this.
Exactly, yes.
Okay, Thank you. Wearing my sort of lawyer's hat on, should it be a legal obligation for all businesses to take out cyber insurance? I'm conscious there is a matter of opinions on this, so probably one for all of us to have a look at. I'm conscious, obviously, businesses are required to have certain insurance in place, such as employers' liability, public liability insurance, professional indemnity for firms such as ourselves. So, Lindsey, from your perspective, what's your view on whether businesses should be required to have cyber insurance?
Yeah, and it's funny because when we were originally talking about this question, I mentioned this is one of the first times I've ever been asked that question, which is probably an indication of how much people are talking about this being an issue. I think we're a long way off still from legally enforcing cyber liability as a product line that's a mandatory coverage at the moment. There is, however, certainly more regulatory and government attention focused on cyber risk and exposure, and certainly around education and security controls, which I think has been quite a big theme so far in a lot of our answers, and taking action around, enforcing when a ransom gets paid. There's a lot more scrutiny around that than there ever has been before. So I think we're in the early days of more legally enforceable action, full stop, around cyber. I think the purchase of cyber policies is still a ways off. We're still really focusing on the education piece. The fact that they exist in the first place, certainly for SMEs, is still a conversation topic. And they've got that as a potential risk transfer solution. But I think it's more around what's going to be enforceable are certain minimum security standards for businesses to help in this fight against cybercrime from an ethical perspective. And, I suppose from a personal opinion, I think it would be nice if companies bought cyber risk as a cyber policy because they understood their own exposure rather than being legally forced to buy it. I think it ends up giving them more investment into their own security measures if they understand there's exposure in the first place. And it's no coincidence that some of the biggest industries we see claims from are those who imagine that they didn't have any cyber exposure at all because they don't fit in that traditional retail healthcare FI bracket that's normally associated with the coverage and with the exposure. So short answer, education, and we'd like companies to purchase for its own merit and understanding their exposure.
Yeah. Are you aware of any other jurisdictions that make it mandatory at all? Say the US?
No.
Okay. No. Well, just curious, really. Simon, from your perspective, any different views or similar views?
Similar. I mean, I broadly agree with everything that Lindsey just said there. In terms of it should be an education piece. It should be people wanting to buy the cover as opposed to being mandated to buy the cover. The only issue I'd say now is, organizations nowadays hold such vast swathes of data, such as sensitive information that may be held, which, not having cyber insurance policies in place, thinking about the duty of care to your customers, and your capability to manage and recover from a cyber event, and that sort of, duty of care to your shareholders. And then all the regulatory tightening up that's going on around, talking about the GDPR, for example, and the fines that are being issued. So whilst I don't think we're in a space where there's going to be a legal requirement anytime soon, I sort of think that we may move to that environment over in a few years' time.
Okay, thank you. Camilla, how about yourself?
Yeah, I'd agree it's not coming anytime soon. I think what we are seeing is much more kind of requirements within contracts between vendors and suppliers for there to be cyber insurance purchased. So mandatory in some ways, but not in the way that you mean. I think long term, as we begin to capture more data, I think potentially there is an argument to make kind of third-party liability insurance mandatory, but I really think we are a long way off that, and there's a lot of work that needs to be done in the meantime.
Yep. And Corinne, to finish off the panel's view?
No, I agree with Camilla. We've seen for quite a long time, actually, companies requiring other companies to carry certain limits of cyber insurance. So in some ways, I guess they're being forced to do it, and maybe those companies are looking for larger limits as a result of those requirements than they would have sought out on their own. But no, that's coming from other companies, not coming down from a government or a regulatory body or anything like that. I think there's definitely increased scrutiny on certain types of companies that are doing certain types of things with data and maybe flying a bit closer to the line, and maybe some of those would be the first to have legal requirements to put certain things in place. But yeah, I agree with the others. I don't think that's imminent at the moment.
Okay, well, thank you all. Interesting to see that maybe market pressure might bring an increase in cyber insurance rather than any sort of mandated obligations. We touched on this previously, Simon. It's probably helpful just to run through what business can expect in buying cyber insurance.
Yeah, so obviously the current environment is challenging. It does take a while, but I'd really urge potential clients when they're going through the process of trying to purchase a cyber insurance policy that they need to understand that it's a proactive. They need a proactive approach. It's really recognizing the fact that a underwriter is going to ask lots of questions in the forms of subjectivities. So it's very helpful if we can together gather up as much information as possible during that whole submission process. So the submission is, headline questions asked about who you are, where you are, what countries you operate in, what industry type you are, any sort of claims histories you've had or issues you've had over the last 5 to 10 years. Your revenue, what sort of cyber cover do you think you would like? Where do you sort of see your risks as being? And as much information around your cybersecurity protocols that you have in place, and what backups you do. So really going over as much of the detail as possible. And I would sort of go against what the underwriters were saying in some of the earlier comments when they were saying that they will look at all industries. My experience from the broking side is that you have the Lloyd's market, and a lot of them will have certain preferences that they will like. So some won't touch UK SME business. Some will only write business where the turnover is in excess of 250 million. Or some will only write or provide cover on an excess of loss basis. So they won't write into the primary insurance policies. They'll only write the layers above that. And then part of the sell, part of the thing of having a broker is that I can help the client navigate all those different areas and help them find the right insurer and the right policy that best suits them.
Okay, thank you for that. Another potentially controversial area is about whether cyber insurance should meet regulatory fines. As we've already sort of discussed, GDPR breaches are leading to quite hefty fines, and probably rightly so, in a lot of people's opinions. From a regulator, same as financial services, the FCA is coming in with fines itself as well, on top of anything the ICO and anyone else might levy. So one for you, maybe Camilla, to start off with, should cyber insurance be covering and insuring against regulatory fines as well?
Yeah, well, it's a very topical question. It definitely was as soon as GDPR came out and those large fines were issued. I think we'd probably all agree, but feel free to jump in if you don't, that insurance isn't intended to cover fines that are punitive in nature. Like, it removes that kind of element of punishment if they're not actually paying that fine themselves. But fines resulting from kind of negligent and innocent behavior should be covered by insurers, in my opinion, anyway. In the cyberspace, what's difficult to determine is what is kind of wrongful versus negligent. So is not patching kind of a system promptly negligent or kind of a deliberate act, or is something kind of really classified as wrong if that cybersecurity practice is also carried out by all of your peers? It's just a difficult kind of area to navigate. And while cyber insurance is now an established product, we're lacking kind of lots of test cases through the European courts to define negligence in this context. As insurers, our intention is definitely to cover fines where insureds weren't deliberately or kind of recklessly doing something wrong. But I think we need help from the courts to establish exactly where that line kind of sits.
Yeah, no, thank you. Lindsey, from your perspective?
Yeah, I agree with Camilla's comments there. I think, cyber policies have typically on an affirmative standalone cyber policy has always had regulatory fines and penalties coverage within the policy. And that came out of the fact that we are all concerned about PCI, payment card industry fines, penalties, which are typically a US issue. We have yet to see that outside of the US, despite a lot of clients caring about it. That was the intent of the coverage in the first place. So when GDPR came out in 2018, there was a lot of rumbling in the market about, whether it was insurable, lots of chat about that, and lots of inquiries about cyber insurance from people who had never inquired about it before, on the basis of now a lot of companies running around talking about the importance of GDPR. The 20 million euro fine was quite a scary number, particularly for a UK SME to hear. The other part of GDPR, though, if we're speaking in that context, is it's not just for wrongful disclosure of information, it's also for wrongful collection of it in the first place, or negligent collection of it, I should say, which hasn't yet been defined and isn't necessarily a cyber issue. To wrongfully collect that information, there hasn't been a breach, there hasn't been a disclosure, and that's really what cyber policies were intended to cover. And I still think that's very much a gray area in the market, although there are solutions for it available, just not as standard. And should they be insurable, I guess was your main question there. Yeah. It's still coverage that clients are asking for. Back to Camilla's point, it's got to be where it is actually legally insurable. I think if a company is going to consider buying a cyber policy on the basis that they're nervous about a regulatory fine or penalty, I think the point has been missed as to what cyber insurance actually does, because it is so few and far between in terms of those payouts. What we're really doing is offering the incident response service up front to prevent a third-party liability claim and to prevent regulatory action from happening. Because as we've seen time and time again, the way that you handle it up front, how quickly you handle it, and the method of which you handle it can largely avoid all of those. And I think that's why it's less than 4% of our claims activity at CFC, and why 96% of it is all on the incident response and forensics and notification costs. So I'd keep that in mind. And then just from an ethical perspective, clients are asking for that coverage. So we'd like to offer the coverage that they're asking for, but morally, there's definitely a case to be made that we should be fining and penalizing the criminals rather than the victims, the clients and companies who fall victim to it.
Thank you. Simon or Corinne, do you have anything else to add to that at all?
No, I think it's been pretty comprehensively covered from my perspective. But I'd absolutely completely agree with that whole concept of the moral hazard, as it were. So the fines are there to serve a purpose, and they shouldn't be, clients that are acting in their best as an honest broker shouldn't be penalised for anything that. So yeah, absolutely.
Yeah, I would agree with everything that's been said as well. I think an interesting area that was touched on is the fact that some of these regulatory bodies now have the ability to issue fines without there necessarily having been a breach. So that grey area that Lindsey alluded to, where traditionally cyber policies were really kicking in when there'd been a loss of data or loss of information, whereas now you're seeing them get triggered off a breach of privacy law. And I don't think we're really at the point yet where regulators are almost like proactively going to look at companies and audit them and see whether they might be doing something that's breaching the law before there's been an event. But it'll be interesting to see whether that does pick up a little bit in future. But yeah, I think the difficulty that we've got as insurers is there's such a lack of precedent, and it's not necessarily something that we should be deciding. I think it's something that needs to be explored a little bit more in the court.
Yeah, no, it does raise all sorts of public policy and ethical issues here. And I like how you segment between sort of deliberate acts against sort of negligence or inadvertent acts, because accidents do happen. That finger can unfortunately press the wrong button at the wrong time. Thank you. Another interesting area that's causing some discussion as well in the market is whether cyber insurance should cover ransomware. Corinne, maybe one for you to start off with. Let's see your views on that one.
Yeah, sure. I think this has come under quite a lot of scrutiny recently, and people pointing fingers at insurers and saying we encourage the ransomware by paying all the ransom demands. But I think it's really a balance between doing what we need to do to dissuade and prevent the the increase in criminal activity, but ultimately we also need to be there to protect our clients. I think an important thing to remember is nobody is paying a ransom without a great deal of thought going into that. It's normally an absolute last resort. There's always going to be so many different things to consider. Each case is going to be very different. Some companies might have policies that they're never going to pay a ransom. Some countries won't allow you to pay a ransom. There's sanctions to be thinking about as well. I think we are always taking the stance that we're really persuading companies to have the right controls in place so that they'd never be in a position where they have to pay the ransom. So going back to some of the things we were talking about earlier about making sure that we're covering companies that have baseline controls in place to help them. So looking at backups is really key here. We'd hope that most companies would be able to restore from backups. So paying a ransom really is an absolute last resort, and it's not really the most common decision made. We also have a lot of other companies on hand as part of our vendor panel that can assist. So they'll be really trying to help a company understand who is asking them for this ransom, and they really understand those companies. I'm calling them companies, they're criminals, but they act like companies in a lot of ways. They can recognize certain things that those criminals say, and they'll know whether they're the type of person that's actually going to stand by their word and decrypt the information once the ransom's paid. So there's a lot of advice, there's a lot of thought, and there's a really defined process that we go through with our insureds before a decision is ever made to pay a ransom, and it is a last resort. So.
Yeah. Although interesting that we're dealing with some organised crimes here who will have FDs, a C-suite. They're that structured in their approach, and that actually you can trust them to deliver in respect of ransomware. Lindsey, from your perspective, any sort of views on whether cyber insurance should cover ransomware? I'm conscious, looking at organised crimes, that they may even set the ransom at the level of indemnity of insurance, which does raise an eyebrow or two.
Yeah, absolutely. And Corinne put it really eloquently with her comments around, we really want it to be the last decision a business makes is to pay the threat actors and essentially pay the criminals. So we'll do all of that research on their behalf in order to ensure that's not the case, and they've explored all of their options. But it isn't realistic to expect that there aren't going to be times where a business does have to actually pay. It's our belief that most businesses, particularly on the small business side, without the assistance and the experts from an incident response perspective that come with cyber insurance, helping them make that decision and doing sanctions checks on their behalf and looking to negotiate the ransomware down, if not get the decryption key back without having to pay, it's our belief that they will make the decision to pay because they won't know what the alternative is. So we want to provide that coverage because, and it was mentioned, clients are expecting that coverage and they're asking for that coverage. And there are instances, I'll go back to healthcare as an example again, but critical national infrastructure is another one that comes to mind, where they have no choice but to pay because of the nature of their business. So I think the other point on that is, and we talked about this earlier, there's only 15% of UK businesses who are buying a cyber insurance policy, but more than 15% are falling victim to ransomware attacks. So it's not the availability of the extortion coverage that's fueling crime, so to speak, or causing concern about whether we should offer it or not offer it. Criminals are still going after companies, whether there's an awareness of a cyber policy there or not. In fact, our threat analysis team strongly believe that they're not going after policyholders, they're going after companies. And if they find a policy, it's a bit of a silver lining for them. So I think there's more meaningful discussions to be had, certainly within the insurance market, but with brokers, specifically with clients, around the fact that we pay all this attention to the extortion coverage. The more expensive element of a ransomware attack is often the system's rebuild and recreation costs in the event that a client chooses not to pay. And those are typically afforded at full limits, easily available in the market. And it is an option to help incentivize clients to not make that decision, knowing that they've got the benefit of a policy limit should they choose not to. So if we could structure conversations that way with clients to better incentivize them to come to an informed decision rather than an off-the-spot decision, and that expert assistance can come with cyber insurance, I think we'll all be in a better position for it.
Yeah, no, thank you. Simon, from a sort of brokering perspective, do you see that as a sort of priority when businesses come to you, or do they look at other aspects in purchasing cyber insurance?
Yeah, absolutely. I mean, ransomware, because of the coverage it's received, it's front and center in everybody's minds at the moment. And I'd agree with everything that's been said by Lindsey as well, but also touching on what will be interesting to see in how the ransomware argument develops over time is from the 1st of October 2020, I believe OFAC, which is the Office of Foreign Assets Control, as well as the Financial Crimes Enforcement Network, both issued separate advisories to the US, both US individuals and businesses, trying to combat ransomware scams and attacks, and basically trying to advise against those individuals paying or facilitating payments because they may violate anti-money laundering statutes or inadvertently be funding terrorist organizations, because by nature the ransomware is an extortion, and you're not necessarily going to know who the extorting party is. So that sort of calls into question, possibly if there's going to be any legislation brought down the line about those advisories, and what sort of far-reaching effects that those could have, and potentially change the whole nature of the cyber insurance discussion, not only in the US but looking across the rest of the world. And everything is primarily driven by what the US does in this space, because they are by far the largest market. They are typically the more mature markets that buy this sort of cover, and they do provide templates that do get adopted.
Yeah, and presumably, if one of our business clients, receives that ransomware attack, first thing they obviously should be doing is calling their broker insurer rather than looking to enter into any discussions and negotiations.
Absolutely. There's normally like a crisis line or a very clear section in the policy that says, in the event of a claim, or if you believe you're subject to any form of threat, these are the people to call, and it should be very much the first thing you do rather than trying to handle it yourself.
Yeah, no, agreed. Thank you. Camilla, from your perspective, how do you see sort of ransomware developing over the sort of next year or two, if at all?
I think right now it's difficult to see it kind of stopping or the trend falling away. Companies are slowly stepping up security, but at the same time, the threat actors are always advancing their techniques too. And I think given the profitability for these criminals, I think, as Simon's touched on already, I think it will only stop or begin to reduce if some form of regulation is brought in. So kind of in a similar way to what we see on kidnap and ransom policies. I think historically regulators have turned a bit of a blind eye to these payments, but as they're getting larger, I think it's becoming more and more difficult to see such large sums of money being handed over to essentially criminal gangs. So I think if that regulation is enforced, which I don't think will be in the short term, but something that might happen in the next couple of years perhaps, then business interruption cases are probably likely to spike in the short term, but that will probably lead to a reduction in terms of ransomware frequency in the longer term. I do think it's important to remember, though, that obviously ransomware is a massive focus for all of us currently, but if that does end up drying up, these criminals aren't just going to stop trying to make money out of cybercrime. They'll find another technique. So even if that regulation is enforced, I think that cybercrime is still going to be a massive concern for insurers and clients alike.
Yeah. No, I mean, it does grab the headlines of, not that long ago, it was reported, I don't know how accurate it is, Garmin paid $10 million for ransomware to recover data. So it does grab the headlines. Whether or not we'll see changes in that to try and reduce those opportunities. But as you say, the criminals will just turn their eye to elsewhere, whether it's selling data on the black market, well, they do that already, or other forms. Lindsey, from your perspective, how do you see this area developing?
I agree with Camilla. Ransomware is not going to be going away anytime soon. As soon as another group retires and says that they're not involved in it anymore, they crop up in another form and another name with a different variant of ransomware. So not too dissimilar to the pandemic we've all lived through. I think it's going to involve more targeted attacks, certainly more what we call double extortion events, where data is stolen to incentivize companies to pay the demand, which is driving up the severity of them. We don't see a slowdown in that. I think The other point in terms of cyber risk we haven't touched too much upon today is systemic risk as well. So ransomware keeps all of the cyber insurers up at night, but so does the fact of systemic risk and what an aggregated cyber cat event looks like in the event that one of the big cloud computing providers goes down and affects millions around the world. So a lot of what we're doing right now is not only, again, making up for what has been unprofitable in the last couple of years due to these ransomware attacks, but it's future-proofing against the systemic risk events as well. The market, in terms of what the market's expected to do the next year or two, I think we're still quite firmly sat within a hard market cycle. So I think we will continue to see rate increases at least the next year, potentially two. I think we'll be seeing a lot more adoption of security measures in place. And I will sort of preface this because I had a call recently and I saw a question come up in the comments about security measures. It's not the cyber insurer's job to be the IT director and CISO, and we're typically not looking to replace that with that. But we are looking to work with them and expect that in place because we've seen it make a meaningful impact on our claims data and our trends. So are these security measures required for you as a business? Absolutely not. Are they required in order to get insurance today because we've seen them have an impact on our loss ratios and our trends? Yes, they are. So whatever we can do to help minimize that and make it look like we're going to be preventing future claims from happening, that's why we're really pushing for those security measures. And I think to the earlier points we made, cyber insurance, you should expect a cyber policy to start working for you from the very first day that you bind the policy. So it should be a proactive policy. The cyber insurer should be continuously scanning for your vulnerabilities to assist the work that you're already doing, if not replace it fully. And we should be able to get ahead of claims before they happen. And I think from a long-term perspective, that's really going to help keep the cyber market sustainable and still a line of coverage that is insurable altogether.
Yeah. And what sort of systemic risk are you sort of looking to try and prepare for? Is it sort of the likes of Microsoft going down, or is it something a bit more localized?
Yeah, it's a good question. And it's really any third-party dependencies that would cause operational disruption for a company if they rely on them. So it can be Microsoft. We saw that with the proxy logon vulnerability in March earlier this year affect a number of businesses. We saw Kaseya, an MSP out of Florida, that affected thousands of businesses around the world, not just in the US. Blackbaud was a charity cloud computing provider around May 2020 who hosted on behalf of a lot of educational institutions and charities in the UK who ultimately were affected by it as well. So any dependency from managed service provider to cloud computing provider to payment processor, if those go down and it causes business interruption or any financial loss for the clients using them, then that becomes their issue as well. And so that's what we're looking to avoid.
Okay, thank you. And then final sort of question to you all, really. How do we see sort of cyber insurance developing over the next few years? Corinne, do you want to kick that one off at all?
Yeah, sure. I think recently I'd maybe start with highlighting the effect of the Lloyd's mandate on silent cyber, which effectively said to more traditional lines of business who might have been picking up some cyber exposure in the past that they now need to underwrite to it and charge for it. So that's had a knock-on effect for the cyber market because different lines have taken different approaches. So now we're taking on some of those exposures that might have sat in traditional lines before. So one of the areas that we've already gone quite a long way down the path of is cyber property damage. So we've got expertise on the team that looks at that specifically. We've got a specific product for that as well. So I think maybe the property market and some of the others have been in a slightly harder market and taken quite a hard line on cyber. So that's had a knock-on effect back onto our team. We're still seeing a lot of development in the legal landscape. So particularly around biometric information, which has come up a bit. There's a few states in the US that have brought out laws, and that's having an effect with more people starting to take a keener eye on that, which is also filtering into the coverage that we're providing. We're also still seeing a lot of other countries that have been less developed in this space before from a legal perspective, coming out with laws. So that's driving more uptake outside of the US, more awareness. And I think really over the last few years, we've talked about the market cycles. When the market was a little bit softer in cyber, the coverage really did get pushed to the absolute limits. So we've got really, really broad triggers in there now. We've touched on the contingent business interruption and what was just being discussed in terms of those kind of aggregate exposures that we've got if there's a supplier that goes down and affects multiple companies. I think we might start to see some of those coverages not brought back, but maybe a keener eye. So they're still available for those companies that understand those risks and demonstrate that they're managing them well, but maybe kind of pulling back a little bit on some of those really, really broad coverages that are available at the moment for companies that are less equipped to manage their exposures.
Thank you. Camilla, from your perspective, how do you see this market evolving?
Yeah, in terms of kind of the traditional cyber market, I think there's going to be, like we've discussed many times today, a continued focus on those controls. The premium will continue to increase because of the results we've seen over the last couple of years and the aggregation issue that Lindsey touched on, which is a major concern for insurers and stakeholders alike. And then outside of the traditional cyberspace, as Corinne touched upon, these cyber exclusions are now being applied to kind of the majority of the traditional lines, so property, cargo, marine, and the cyber market has begun to launch a number of products to address those gaps. So I think there will be an uptick in kind of insureds purchasing that kind of non-traditional cyber coverage. But yeah, just a continued focus on best-in-class security and continued premium increase for most companies to ensure that the cyber market is still around for the coming years.
Thank you. And Lindsey, from sort of CFC's perspective?
Yeah, I think nothing too much from what I just said. It is going to be more of a proactive product. We're concerned about ransomware and systemic risk. So it's again about future proofing against losses that we expect to see, as well as getting back into a position where we feel like the price is right. And getting the price right means we can avoid knee-jerk reactions in the future. We can make cyber insurance more accessible because we feel comfortable with the right price being added to the right risk. So data, scalability, claims trends, being proactive rather than reactive in our underwriting as well are going to be all extremely useful features and something that all cyber insurers are looking at right now.
Thank you. And finally, Simon, anything else to add?
Not a great deal. That's already been covered, but yeah, completely agree that you're going to see continued price adjustments, restricted market capacity, likewise with the appetites and coverages. But I know what will be interesting to watch over the next couple of years is the global head of Aon, which is one of the world's largest insurance brokers, very much has cyber and intellectual property as the new, even though they've been around for a while, but they are sort of the up and coming classes of business going forward. It'd be interesting to see if there's a coalescence between those two markets and how that will evolve. So, a classic anecdote would be the Woods Hole Institute, which is quite a famous oceanographic center in the US, one of the world's leading oceanographic centers, had a hack they traced the source of the hack to a building in China, and it was on the intellectual property that the Woods Hole Institute held for deep sea submersibles. And when they tracked it back to this building in China, it turned out that particular area in China was centered around their space program. So it was looking at the intellectual property being stolen from the Woods Hole Institute and applied to deep sea submersibles, then being utilized to help solve the Chinese problem of sealing hatches for spaceflight. So it'd be an interesting thing to see how those things work together going forward.
Yeah, and certainly intellectual property is becoming more and more valuable, and we can see the rise of theft of IP across a number of businesses. We've had a question coming from the audience. I'm just going to read this through, and then hopefully one of you or a few of you can answer this one. Having had cyber insurance for a number of years, it's becoming increasingly difficult to obtain. The expectation of the insurers in terms of IT controls is becoming unreasonable and does not appear to be directly linked to the risk. Will the insurers start to take a more pragmatic approach in offering cyber insurance. I know, Lindsey, you did sort of touch on this already briefly. I don't know if you wanted to expand a little bit more at all.
Yeah, so will insurers start to be more pragmatic in offering cyber insurance? So 2 points to that. One I did touch upon. So I guess the first one would be we're looking for a basic set of minimum security controls, something that if it's an event that affects all industries of all sizes and all territories, then we're not going to take an industry specific approach with that. But those are just really for the basic level of security measures being adopted. And I think what will put us in a better position and seem more reasonable as insurers is if we actually provide companies and yourselves with the resources to get there, and we help you become an insurable risk, essentially. So I think that's one piece of it. I do agree. I think I would use the word unreasonable if we were to broad brush blanket everything with not looking at a risk on its own merit. I think cyber insurers are getting better at it. I think going back to the earlier points I made around the data and scalability being really key to know what impacts what industry or what's relevant to what industry will start to get a lot better, but we're not there yet. I think one of the more recent changes that we've seen, and certainly that we've adopted ourselves, is on the proposal process itself. We've tried to make the answers that we're looking for a lot more qualitative rather than black and white sort of yes, no check box answers, whereas the question might not necessarily be relevant to you at all. And you mentioned the 2FA on students rather than teachers. Another example could be where we've asked if you encrypt information on portable media devices, but you don't store any sensitive information on portable media devices. That question doesn't make sense, but we want to give you the opportunity to actually explain that in a narrative rather than be forced to check no. So I think we're getting a lot better at that. I would highly recommend, I'm sure most people will, despite it being extremely busy time, that we try to get on the phone with you and have more of an onboarding discussion as a potential client rather than be subject to written answers. But certainly it's something that the industry is aware of and working towards in being a little bit more specific in how we approach it.
Yeah, okay, no, thank you. Camilla, anything else to add at all?
No, just to Lindsey's point, I think it's difficult when there are yes and no answers on a proposal form, because if you see a no, you're obviously going to assume the worst as an insurer. And I think that's why you need to establish a good relationship with a broker, if you're using a broker, and the underwriter, just so you can explain the specifics of your risk so the insurer can make a kind of considered decision rather than just basing it on a yes or no question. Because we appreciate yes and no doesn't work for everyone. And there needs to be more dialogue between insurers and insureds.
No, agreed. And Simon's probably right for you to step in here. Presumably this calls in sort of maybe broker support where a business may be struggling to secure cover.
Yeah, absolutely. And, hopefully harking back to some of the points I mentioned earlier on, it's all about being proactive and having that relationship and with the broker, us working together to gather as much information to then present to the market, and then for me to go around a whole bunch of underwriters with that presentation and then help with the purchasing of that cover, hopefully with the best pricing and best coverage options for that client. But yes, it's very much a proactive approach, recognizing the fact that you're going to have to ask questions that answer questions, and there will be questions asked, but working together and providing as much information up front to the insurance company as possible.
Thank you. And Corinne, anything else to add to that one?
Just to say, I really get this. We've had a lot of feedback from brokers and clients about this. I think it feels like the market's moved along really, really quickly, especially given the fact that a lot of insureds are renewing annually. So a lot has changed in a year, and there are certain requirements now that didn't exist 12 to 18 months ago. So I think it can be quite frustrating when you don't have any issues, and then the next year you're suddenly told that you're completely uninsurable. But I would, again, just agree with what the others have said. We can only go off the information that we've got. Some proposal forms aren't that helpful if they say yes and no, but I would just encourage people to give as much information and context as you can. It's really, really helpful for us. We're trying to understand people's businesses and people's networks, but we also need to show positive controls in certain areas. If we just get a no back, we can't do much more with it. But if we get an explanation as well that qualifies it, then that's really, really helpful. The only other thing I'd say is the control requirements that we have do come from somewhere, and we hope that if we're seeing certain trends and we're highlighting certain things that we believe can be done to protect companies, then we hope that most of the insurers that we work with see similar trends and think about doing similar things. If somebody doesn't see the value in a certain control and we see it as being the most important thing that they can do, then we question slightly where their strategy is with their security.
Okay. No, thank you. That's been really helpful. That also now concludes all of our questions. Once again, thank you to you, Corinne, Camilla, Lindsey, and Simon, for your expertise and clarity in answering all the questions. Nice to hear that at least one of them was a bit of a surprise and not necessarily been addressed previously. And also to the audience for listening to our discussion around cyber insurance. It is a complex area. What I certainly take away is, unlike my car insurance, I shouldn't be leaving cyber insurance to the last minute. You should be preparing, well, throughout the whole year, really, being proactive, staying in touch with the insurer and the broker, so you're not necessarily ambushed at last minute with security controls and processes in place. It's clear, some of the figures that we've heard, that cyber is on the rise, costing $1 trillion per annum. I'm not even too sure how many zeros that is, but it's a huge number. An attack taking place every 11 or 12 seconds. So all we can do is just try and mitigate the risks as far as we can. Bit of a cliche, but no one is ever 100% secure. Once again, thank you to the panel for your excellent input on this, and thank you to you for listening. Goodbye.